Back in August this year, shortly after Tesla had published its Q2 earnings, Tesla CEO Elon Musk caused quite a kerfuffle on Wall Street after he published a series of now infamous tweets discussing the possibility of taking Tesla private. Those tweets discussed a potential sale price, $420 per share, at which Tesla shares could be purchased back from shareholders who did not wish to go private, as well as make some statements about funding which implied that the whole thing was a done deal and only required shareholder approval to go ahead. It got Elon in quite a bit of trouble with the US Securities and Exchange Commission, which ultimately served papers at the US Federal District Court in Manhattan, asking the court to find him guilty of securities fraud by jury. At the end of September, before the case proceeded through the courts, the SEC announced that it had reached an out-of-court settlement with both Tesla and Musk. It proposed Musk be replaced as chairman of the board of directors, but remain CEO, Tesla bring on 2 new additional independent board members, and set up a new committee to vet Musk's tweets and other social media communications. It also required Musk and Tesla to each pay $20 million in fines. Yesterday, that deal was approved by Judge Allison Nathan of the U.S. District Court of the Southern District of New York, meaning it can now proceed as outlined. And while some of the deal itself is controversial, some of you approve, some of you don't, some call it unfair and petty, given what other company CEOs have, quote, gotten away with, and some of you even suggested it was some big oil conspiracy to kill Tesla altogether, it does mean that the pressure is off Tesla for now. Or rather, the pressure is off Tesla from the SEC. Tesla was, at least last month, complying with the US Justice Department over those same tweets, and we don't yet know what the outcome of that investigation will be. With the deal all signed and sealed with the SEC, it's worth taking stock and asking what's next for Tesla and what the details of the deal was. Immediately following the announcement yesterday, Tesla shares enjoyed an upward boost, presumably as investors heaved a sigh of relief knowing that the deal was finally approved. In the official filing concerning the settlement, I've linked to it in the description below, Tesla states that, quote, Tesla and Elon will pay a civil penalty of $20 million, that Musk will resign as chairman of the board within 45 days of filing the settlement documents, replaced with a, quote, independent director replacing him as chairman, and, quote, in 3 years, the board will be able to reappoint Elon to resume the role of chairman of the board if such reappointment is approved by the majority vote of the stockholders at such time. It also lays out the other details I've already mentioned above, as well as noting that Musk will be able to continue to serve as both Tesla CEO and member of the board of directors, just not chairman of the same. It also reiterates that neither Musk nor Tesla are admitting or denying the allegations made by the SEC, and states that Tesla will, quote, employ or designate from among its existing personnel an experienced securities lawyer, presumably to make sure this doesn't happen again. As I've already noted, news that the deal had been approved did send Tesla shares upwards, but this morning in its 8K filing noting the SEC deal, Tesla also added the following statement. Separate and apart from the settlement, Elon has notified Tesla that he intends to purchase from Tesla, and Tesla expects that it will issue and sell to Elon $20 million of Tesla's common stock during the next open trading window at the then current market price. In other words, Musk is paying $20 million in fines to the SEC and then also buying $20 million of stock from Tesla, the proceeds of which I suspect will offset the $20 million fine that Tesla now has to pay the SEC. In exchange, Elon will get to benefit from having those extra shares, and should Tesla head to profitability, the chances are he'll get a decent return on his investment to boot. What's next after this? Well, with the SEC filing behind it, Tesla can once again now focus on expanding its production, and you might also expect Tesla's share price to tick ever upwards, especially as Tesla has just announced production of its 100,000th Model 3, as well as received approval from the Chinese government to buy a 210-acre lot in Lingang, Shanghai. That factory, nicknamed Gigafactory 3, will be Tesla's first non-US production facility and will make cars from scratch for the Chinese market, allowing Tesla to skirt around import tariffs and benefit from lower running costs too. Tesla is already planning accelerated construction of Gigafactory 3, and according to its last earnings call, says construction will cost about $2 billion, with most of that money coming from local debt. Yet it's debt back home in the US which now presents Tesla with its next big challenge. And that's because Tesla has convertible senior notes that are due to be paid next month at an estimated cost of $230 million. Then in March next year, it has further convertible senior notes that are also due to be paid, totaling $920 million US. For those who don't know, a convertible note is a form of short-term debt that can be converted into equity. It's a source of short-term funding for the issuer of the note, but when the note matures, the date when it must be paid back, that issuer has to pay back the investor with whatever interest was agreed at the time the note was issued. The term senior, well, that just means that it gets priority over other investments. So if the company issuing it does go bust, holders of convertible senior notes get first pickings of whatever is left after liquidation. At the moment, provisional figures do seem to suggest revenue will be at an all-time high when Tesla releases its Q3 earnings next month. It is conceivable that Tesla's Q3 revenue, especially if it continued the cost savings from Q2, could just about pay for November's due senior notes. It could also just convert those notes into shares, giving holders of those notes an appropriate proportionate shareholding in the company as listed under the notes' terms. It may also, although I think this is unlikely, be able to convince the holders of the notes to extend the due date and/or issue new notes to cover the due ones. In short, Tesla's deal with the SEC means that's one less thing for the company to worry about, but with a lot riding on Tesla's Model 3 and some pretty big debts on the horizon, it's going to be more hard work for the rest of the year. Does this mean Tesla is in trouble? Well, were it any other company, I would say yes. But Tesla's shareholders and investors are a special breed, and I'm guessing some will be willing to dig deep to help Tesla succeed, even if that means making more investments. Tesla has said another stock offering won't be required, but if it does happen, I'm sure it will have no trouble finding buyers. That's it. Thanks for joining me. I'll see you next time.